Hey, what's up guys? My name is Andy and you're watching Andy's Fire Club. So today I wanted to talk to you about some pathways to fire. Now, what I mean by pathways to fire is that a lot of people, they want to achieve fire, but they don't know how to start, right? They don't know how much money they should put, and they don't know what kind of targets they want to achieve. So today I'm answering the question, what kind of money do you need to actually retire early? But before I begin talking about that, I want to talk about something called the 4% rule. So the 4% rule states that with any portfolio, you can withdraw 4% of your investment portfolio's value every year without ever depleting your principal, which means that if, let's say you have $1 million invested, you can withdraw 4% of that, which is $40,000, and you can continuously withdraw $40,000 without ever having it impact your original $1 million investment. And you think to yourself, how does that work? I'm withdrawing money, but the money's not getting any smaller. So the fact is that $1 million that's been invested is growing, and it's gonna grow faster than 4% a year. So generally, if you invested all the money into, let's say, an S&P 500 index fund, right? So we talked about index fund earlier in the channel. Be sure to take a look. But if you need a refresher, an index fund is just a basket of stocks that represent a lot of companies, right? So instead of you having to manually buy a little bit of every company, if you just want to diversify your money and have a little bit of money in each company, all you have to do is you buy into an index fund and it'll automatically take part of your money and put it into every single company that's in the index, and it'll help spread out your money more easily, right? So if you put your money into an index fund, you can expect in the long term, and in the long term, I'm talking like 10, 20, 30 years. In the long term, you can expect about 8% per year on average. That's just historically how well the stock market has performed. If you guys don't believe me, you can look at some historical charts. So in the long term, we can probably safely say that the market will go up by more than 4% per year, which is why that 4% is such a safe number. Right? You can withdraw 4% of your money from your portfolio, and even if there's a recession, even if the market crashes, as long as you withdraw 4% and no more than that, then you'll never touch your principal. So that's what's called the 4% rule. So if you think about what I said earlier, 4% of 1 million is $40,000, right? Now, that might not sound like a lot, but here in Ontario, Canada, the median individual income is about 40,000 Canadian dollars, which means that if you have $1 million invested, you can safely withdraw the median individual income here in Ontario, Canada, every year completely passively, meaning that you can have that $1 million invested and you could just take $40,000 a year from it and you'll never deplete your principal. You can just keep on doing this forever and ever, and you'll never touch that original $1 million. So it's almost like having somebody work for you for free. And if you think, oh, maybe $40,000 is not enough to sustain yourself on, well, that will be a good basis point at least for you to move on, right? Maybe some years when the market is doing good, like this year, maybe you can get away with even pulling out a little more than 4%. The point is that wouldn't it be nice to have a median individual income coming your way every year without you having to do anything, right? So that will be a great stepping stone for you to achieve fire if that in of itself doesn't make you achieve fire already. So let's talk about this chart. I know this chart looks complicated. It's not, I promise. I will explain it. I've set $1 million as sort of a target for you to reach. So you want to get to that $1 million so that you can collect that median individual income passively for every year, forever. So I used an online calculator for this. Now, I'm pretty sure I got all the numbers right, but in case I got something wrong, be sure to point it out to me down in the comments. But I think I got it right. So what this chart is essentially a table of what kind of returns that you want. So in percentage wise, and these are annual percentage rates, and how much money you're going to contribute to your investment portfolio each month, assuming that you start off with nothing, right? So it's a little bit small. I apologize, it's up there. I'm not sure if you can see it. So we are assuming that you're investing money for 15 years. Now, I'm 24 years old, so let's just round that up to 25, right? So 25 plus 15 is 40. I hope I did that math right. So if I want to retire by 40, then I got 15 years to invest before that happens, right? So if I invested this amount of money every month, this is what I will get at these interest rates. And we're also assuming annual compounding. So if you don't know what annual compounding is, basically it's how often the interest is calculated, right? So the smaller your compounding period, the more money you're gonna get. Let's say your compounding period is monthly, which means that the interest that you earn is gonna be calculated as part of the next interest payment at the end of the month. So the way you wanna think about it is that let's say you have monthly compounding, your interest that you collect for that month gets calculated into interest that would be paid to you the next month. So it rolls over, right? So you're making interest on top of your interest for that month. Now with annual compounding, you do that once every year instead of once every month. So once every year, whatever interest you make for the next year, that interest is gonna count as part of your new principal. And then you're gonna get another interest payment on top of your old money that you earn. So it's interest on top of interest is what's called compound interest. It's a very powerful force, and that's what's going to help you essentially achieve a $1 million investment portfolio. So with that being said, we're assuming annual compounding. We're assuming you start off with nothing, so it's $0, and we're assuming 15 years. So now the question is, if I have 15 years and I have no money right now, how much money would I have to contribute? At what rate of return should I get if I want to get to $1 million? Now I've circled all the ones that are above $1 million in green, and you can take a look. So for example, if I contribute $2,000 at a rate of return of 8%, well, that's only gonna net me $675,000, which is not a small amount by any stretch of the imagination, but it's a little bit short of our $1 million goal. So this is just a condensed table. I skipped some percentages. I'll post a picture of the entire table with all the percentages in between somewhere, probably a link down in the description or a picture somewhere. But essentially the point is that if you want to only invest $2,000 a month, then you're going to have to do a little better. So you're going to have to do a rate of return of around 15% per year in order for you to get to over $1 million, right? So remember when I said that 8% is the general accepted long-term market rate of return, right? So which means that if you take your money and you put it in the market portfolio, so kind of like an index fund, you can expect 8% in the long term, right? So if you're picking your stocks, maybe you can get a little higher, right? So if you're picking stocks that you're really into, if you're applying some of the knowledge that you've learned so far on this channel, let's say you bought Tesla stock recently, right? So if you did any of those things, maybe your rate of return will be higher than 8%. So if you really are willing to do research and you're willing to put time and effort into researching stocks, and you get good at investing, you could feasibly get more than 8%, right? You could be edging towards the 10%, 12%, or maybe even 15% rate of return. Now, 10% I would say is pretty good. 12%, that means that you're a really good investor. You've done your homework, you've done your research. Now, if you're really, really good, you can get up to 15 or maybe even higher, depending on how well you do. The point is that 15 would be considered an excellent investor. And that's sort of the goal that I kind of want to reach myself personally. And I want to teach you guys how to reach that as well. Now, recently, I've done a lot better than 15% actually, but that's only because the market's been doing so well. And I bought some Tesla stock back when it was like 200 bucks. But if we're in a recession or something, my goal is that I can maintain that 15% or higher, but we'll have to see. So part of the goal in this channel is to help you get close to that 15% as well, right? So hopefully by the time that you watch this video, you've also watched some of my other videos and you have an idea of how to maybe try to pick stocks and try to get yourself to a higher rate of return than 8%, right? But let's say you don't want to do any research. Let's say you don't want to do any homework. You're not interested in investing. You just want to retire early, but you're not interested in researching and putting time into this. Well, if you just buy an index fund and put all your money in there, unfortunately, $2,000 a month is not going to get you to $1 million in 15 years. If we go over to 3,000, then you can see that if you put in 3,000 every month, even if you're just putting it into an index fund, you can still get to over $1 million, right? So let's say you put in $3,500 a month and you get a 15% rate of return. So the best case scenario out of all the options that I listed here, you can actually get to 2 million or over 2 million. So if you do the math on that, that's double. 4% will be double 40,000, right? So you get $80,000 per month or per year, sorry. You can get $80,000 a year, and that's a really decent income for anyone. And all you have to do is just sit on the couch and watch the money roll in, essentially, right? So if you can actually do that, that will be that's the best case scenario. Now, I know some of you might be gawking at these numbers and say, oh, how the hell do I invest $3,500 a month? I don't even make $3,500 a month. Well, to that I have to say, you do what you can, right? So maybe some of you can't contribute $3,500 a month, and that's completely reasonable, right? That's a large number to be contributing to an investment portfolio. And most people, I would say, don't have that kind of money to just toss $3,500 into a portfolio every month and not suffer any dips in terms of their lifestyle or take any sacrifices, right? But my point is that if you're really committed to doing this, if you really want to retire early, then maybe you should start off with 2,000 or even 1,000 or even 500. So if you start off with, let's say, $500 every month, still that's not nothing, right? So even if you don't get to 1 million, even if the worst case scenario that's on the board right now, even if you contribute only $2,000 a month and you get 8% rate of return, that's still $675,000 by the end of 15 years. So that's not a small amount. So I guess the point of this video is that I just wanted to show you guys what is possible, right? So even if you don't do the best case scenario, even if you get below 15% rate of return, or you're not able to contribute $3,500 every month to your investment portfolio, still you should get started on that, and you should try and work your way up if you can. And I think that this table really goes to show you the power of compound interest, right? So the difference between, let's say, $3,000 and $3,500 is pretty massive, right? So you get to somewhere $1.8 million at a 15% rate of return, which is already a huge number. But then if you just add $500 to your investment every month, you can get to over 2 million, right? So even if you don't get 15% rate of return, you go back to 8, right? So if you look at the difference between each of these numbers, just a $500 difference every month can make a huge difference down the line in terms of how much money you can get from your investments. So I hope that this video has provided you guys with some motivation to save up more money and invest more money, because this is just some simple math and you guys can try it out yourselves. Just Google like compound interest calculator and you'll see. You can type in the numbers and play around and see how much you need to contribute and how much time you want and what's the rate of return that you think you can feasibly achieve. Yeah, so with that being said, thanks for watching. Be sure to follow me on Twitter and Instagram. I'll leave the links down below in the description. And be sure to hit subscribe and hit the notification bell. Thanks for watching. I'll see you guys in the next video.